Good afternoon, guys, and welcome to the podcast. I've got a really special guest for us today, Christine Healy. She's at founder at Healy Pre IPO, and she connects buyers and sellers to pre IPO companies. She's also a former portfolio manager at Destiny and hailing from the great city of Austin, Texas, my hometown. And I really love to have her on the show. Christine, welcome.
Hi, Dr. Lou. Thank you so much for having me.
Yeah. We were very informal, so everybody calls me Chris. And briefly introduce yourself, and I'm really excited to dive into your area of expertise.
Yeah, absolutely. Like I said, really happy to be on this show. If I can, I want to take a moment to encourage listeners to leave a comment and leave a review because I know how much value you're adding for people. And it's a lot of work to put on a show like this and to do what you do. So, brief moment to say that, but really happy to be here. What I'll dive into is the world of pre IPO investing. So, what that means is getting access to large pre IPO tech unicorns like SpaceX, Stripe, and others before they go public, rather than waiting for that public listing to get involved. So, I run my business Healy Pre IPO, which is a concierge style pre IPO access service. So I work one on one with investors and sellers looking to find their match for that next pre IPO trade.
Yeah. And for a lot of the audience and listeners, area is really uncharted. We've had angel investors, we've had VCs come on. A lot of the high net worth, they just invest in the public equities, real estate. Talk about how your experience differs from kind of those areas and avenues?
Pre IPO is a very niche area within venture capital, referring to the large tech unicorns that could be $1 billion, $10 billion, $100 billion companies in some cases, which in any other era of history might be public companies already. So, this idea of these decacorn companies like SpaceX, for example, is relatively new because it's a new phenomenon that companies are delaying their IPOs and staying public longer. So pre-IPO investing is specifically that ultra late stage of VC. And it's attractive to investors for a lot of reasons from what I hear from clients. Early stage venture capital, you're looking at a very new business and betting on which one's going to be a winner in the long run. A lot of investors see this ultra late stage and they see these companies as having more scale, having potentially an exit on the horizon in a few years, while still benefiting from those companies not being public yet and not being liquid. And so that's really the sweet spot for a lot of investors that want to get in before IPO while not being so early as high risk as seed investing.
Oh, another question or a follow-up question is what are the current requirements to get into these companies pre-IPO? Talk about net worth or income restrictions and how you get access.
Yes. At a baseline, the regulations require you to be an accredited investor. So you're typically looking at 200K net income or $1 million net worth or a few other rigid ways to qualify. In practice, sometimes the requirements can be a bit more because even if you technically qualify, what if the deals out there are 250K minimum ticket sizes or a million or 100K or what have you? So there's a lot of accredited investors out there that would qualify for this type of deal, but there's still an art to finding the right deal for the right investor. And especially if you're new to this industry, maybe you're used to public investing. Oh, it can be a maze out there to find the right deal. Let's say you want to put 100K into SpaceX. It's very difficult going out on your own and trying to find how to make that work. So, what I do with my pre IPO concierge service is basically bring my years of experience in this market to help people find the right seller for them and help them navigate things like what investment minimums make sense for them, what structures make sense for them, and make this really new, scary market a little bit more clear for them to go through this process.
A follow-up question I have for you is what makes the client avatar, the people that invest with you, different from those of the VCs? Like what makes you different that gets you access to capital for the buyers that are interested in these opportunities?
I think a lot of seed stage deals, and I'll speak to the angel investor profile, more how individuals would get involved. Often individuals in super early companies might be getting involved with $5,000 check sizes or something like that to get involved in these seed stage rounds. The minimum I work with is from $50,000 to $100,000 per deal. So it's a bit of a higher hurdle for some investors.
Mhm.
On the other hand, as I said, the profile of deals you're looking at are companies which usually are already household names. They have some scale. They have sometimes hundreds of millions of dollars of VC funding and institutional backers. So there's a bit more of a track record to work on. So in that ultra late stage, you're looking at a bit larger deals than ultra early stage, but a bit more momentum and track record to go off of than the earlier stage. So a lot of the investors and the demographic that tend to be interested in these late stage deals are folks like doctors, lawyers, really high earning professionals that might have a side interest in high tech or have been following Elon Musk or SpaceX in the news, and they're seeing these amazing technologies come to fruition as a bystander. And they're saying, actually, I'd love to get a piece of these technologies I see changing our world. And that's the typical profile I work with.
Interesting. The follow-up question I have for you is, what are the, obviously everything has upside and downside. What are the risks of investing in these pre-IPO? Is it legal? Talk about the legal requirements. Obviously, there's fraud, scams. How do you address these to investors?
Yeah, it's a great question. And I do not hide the risks. It's very important that investors understand the risks. When you're dealing with a transaction in a private company, there's the risk of illiquidity. If you needed to sell your investment a year from now, you can't just sell it on your E-Trade like you would a public stock. You have to similarly work through me or find your own private buyer to resell your shares to. It's not as easy as selling on an exchange. The regulations also require that you buy privately to be a long-term holder. So typically, to be comfortable and conservative, that means you're holding for 6 months or longer, ideally longer. And so that illiquidity is something people need to go into with eyes wide open. The other point is the business risk, or the risk of the investment actually panning out. These are private companies. They do not yet have access to the public capital markets. And while they may seem more stable or closer to IPO than the early stage angel investment counterparts, that doesn't mean it's a surefire home run. So we've seen a ton of success stories that, at least historically, have gone from success to success in terms of new funding rounds at higher valuations, like SpaceX, for example. But you also see examples where things seem stable and then went horribly wrong. Companies like FTX, which were active in private transactions, and then their value completely collapsed. Or 23andMe, which was once very actively traded and is now going into liquidation and being sold off. There's no way to really be shy around the risks, but it's a certain type of investor that is going in aware and understands the risk reward dynamics. And it's really important to do your diligence and to work with the right partner. What I hope to bring to people is, as I said, my experience just dealing with some hairy deals, dealing with all kinds of structures, all kinds of counterparties, to give people a bit more confidence when they're going in to know what's what, or if they're looking at 3 different offers, to try and understand the mechanics and what's the best fit for them with more confidence.
Interesting. We do have a question about the IPO versus SPAC and how you handle those those transactions.
When you buy in a private transaction, you hold that stock until there is some kind of an exit. That exit could be M&A, it could be an IPO, or theoretically it could be a bankruptcy or liquidation. SPAC is, I would consider that in the bucket of an IPO, where there's just some sort of public listing. So in the case of a public listing, after the lockup period, which is usually 6 months, but not necessarily, at that point, the shares of that now public company would would be delivered to your regular brokerage account, your E-Trade or your Fidelity or whatever. So in the case of a SPAC, if the ending consideration is this public company shares, that's what you would receive in your brokerage account at the end of the day for that company that you originally bought privately.
Interesting. So talk about some of your the success of Healy Pre IPO. I know you've raised this, you've helped foster significant transactions. Talk about the success and how clients can learn more about this.
Absolutely. So this company is around 9 months old, but it's really picking on close to a decade of my experience specialized in pre-IPO transactions. So I was a pre-IPO broker starting in 2018 for around 4 years, both in San Francisco and Hong Kong, working on APAC transactions and cross-border. I was then a portfolio manager of a New York Stock Exchange listed pre-IPO fund. So that was a kind of different hat, but still within the same industry of pre-IPO deals in high-tech companies. And then in the past 9 months, left that to work independently as a broker. So really, it's a lot of the same client types, the same sort of Rolodex and same sort of transactions that I've spent most of my career on at this point. But the success in my mind is being able to work directly with these buyers, being able to stay a very lean, small business and focus the vast majority of my time on my clients, on deal flow, and not being distracted by minutia, bureaucracy, and or managing a ton of employees. So I'm really happy with doing what I love to do, which is connect people to these pre-IPO opportunities, but in a very lean way where I can still get on calls with clients and give that concierge kind of white glove service that I love to do. And that's really what makes it a success for me when I get to wake up and help clients every day.
Interesting. Obviously, talking about you've done very interesting things because you've got went to University of Chicago and you studied philosophy, politics, and economics, and then you went into investment banking. If you were to like a lot of the doctors and dentists and they want to for the future generation, what skills would you recommend them to study? Is college or undergrad very necessary? Talk about how you acquire these entrepreneurial skills.
It's a very interesting question. I think a lot of fintechs right now are hiring from traditional finance backgrounds. So as intense and grueling as those banking days were, it helps a little bit because it gives you that credibility. If you're trying to interview at a fintech startup where a lot of the team already there maybe came from a banking or a consulting background, then it's a bit easier to gain that trust because they trust the reputation of that investment bank that you worked on Wall Street, or they know the skill set that was ingrained in you through those many 3 a.m. working nights at the bank. So I think the main value to a traditional corporate course is the brand signaling and what it says about you reputationally moving forward. Also, one of the main things I learned in banking was excruciating attention to detail, which can really separate the best brokers from mediocre brokers and helping clients catch those details and understand the nuts and bolts of what they're buying. But I think there's other important skills and characteristics like being entrepreneurial, learning how to work sometimes in chaos or a fast moving environment without much structure. So when you're working independently, those structures don't really exist and you have to really be a hunter for the deals that your clients are looking for. So there's a bit of personality and a bit of natural aptitude, but there are different environments that could breed those same kind of skills. So maybe you could get that working at Google entry level, or you could probably get that as a doctor or a surgeon, that kind of attention to detail that you need when you're sifting through these investments.
Interesting. And then another question I have for you is how do you see AI and blockchain playing a role in kind of the field and work that you're doing?
It's a great question. I had a situation recently where a client told me that they ran their investment docs through Claude to try and see if everything looks okay. And Claude said, yeah, it looks great. There's no carried interest. It's a totally clean investment. And I looked at it myself and saw that there was an error. And actually, the manager had inadvertently put the default 20% carried interest on it, meaning whatever profits you get at the end of your investment, you owe 20% to the manager. That's a pretty big oversight that came from just running the docs through AI. So not to worry, we were able to fix that. But I just think AI, at least currently, is not able to transform the way that these investments are done behind the scenes because they can be so bespoke, so complicated. The legal agreements for this type of investing are quite quirky. And in terms of working as a broker, I don't see AI coming from my job anytime soon. If it does, it will be at a really poor level that I'm not. If anything, I'm worried for my clients if they rely on it, not realizing that it's making errors. That's my concern when it comes to AI, but perhaps in future it'll catch up. At a broader level, AI is really a popular industry within pre-IPO companies to invest in. So there's a lot of demand right now for OpenAI, Anthropic, and a number of other companies within AI. So it's in terms of brokering, I'm not worried about it that much. But in terms of what companies people are clamoring for and asking for, it's been coming up a lot lately.
Interesting. If people wanted to connect with you and learn more about you and learn more about these opportunities, how could they do that?
So I'm very active on LinkedIn under Christine Healy or Healy Pre IPO. I put a lot of educational material and videos out there. You can also find me at healypreipo.com and sign up for my mailing list there where I give more info and insights.
Excellent. Thanks so much. I really enjoyed this conversation, and the audience really got a lot of value out of it, and keep up the great work.
Likewise. Thank you so much.